Hello, and welcome to Monumental, where we sit down with entrepreneurs, leaders, visionaries, and big thinkers making monumental change. Here's your host, Evan Holiday.
Welcome to Monumental. I'm your host, Evan Holiday, and today we have on the show with us the one and only Linying Zou. Lynn, how you doing today?
I'm doing well. How are you, Evan?
Good. Really glad to have you on the show today. Let's dive right into a little bit of Linying's background before we get into today's episode. So 2 years after graduating from Boston College Business School, she bought her first multifamily investment property, and with the goal in mind of having the freedom to travel and the drive to make the change from her unfulfilling job, she started Akras Capital. And their mission is to produce freedom in the lives of their investors and partners so they can live a life focused on what matters most to them without the constraints of time, money, or employers. And so with that, I would love to just dive right into a little bit of your background, Linying, and how you got to where you are today.
Yeah, absolutely. So like you said, I actually graduated from BC with a finance degree. So I spent about 10 years working in investment management. So I was an analyst at first, and then I became a trader. And then I was on a path to be a kind of a portfolio manager position. At the time I was working for a company that had about $10 billion in asset under management. So I was trading, anything from, $10 million to $300 million a day in assets, in fixed income assets. So that was very exciting. The job itself was very challenging, and there were a lot of things going on. It's very fast paced, but there was always something missing from that. At the end of the day, it's making money from money, right? And there's not too much. I didn't feel like there's too much greater purpose in that role. I was just doing the job as a very routine thing, day in and day out. And I just didn't feel like I had control over my destiny and didn't have control over what I want my life to be. So eventually I left that job. I ended up traveling the world about 6 months.
Wow. And
during that process, I was with my business partners at the time for about 8 weeks through, Russia, Mongolia, and China. That we start talking about what does freedom mean to us and how can we make it happen. And the key thing that we all had at the time was passive income for real estate. So I had passive income from rental properties in Boston. And that was basically enough to support my expenses on the road. They pay for, my 2 mortgages. So that was all great. And then, so we just got together and say, why don't we just institutionalize it? Why don't we make this bigger, create more opportunities, not only for ourselves, but also for other investors so that they can kind of realize that this is something they can do as well.
That's amazing. So this all came about from a conversation on your world travels, talking about what is freedom.
Yes. So we were actually on the Trans-Siberian Railway.
Wow.
And, you have a lot of time when you're just sitting on the train going across the middle of Siberia.
Yeah.
So, it's just one of the conversation topics that came up, between drinking vodka and eating pickles, what is freedom and how do we make it happen for the rest of our lives?
That's amazing. So how did you get into your first rentals that got you to that point of even having the freedom in the first place?
Yeah. 2 years out of school, it was 2010. It was the worst part of the real estate market during the last recession. So I ended up, looking around for rental properties, and I found this 3-family. And the whole idea was, at that time, I actually just moved back into Boston. So I was looking for a place to live as well. So I bought it really to house hacks that would live in 1 unit and then rent out the other 2 units. So that went really well. And then, I got really involved with my full-time job and, just doing the work there that I kind of stepped away from the real estate investment side for quite a bit. So it wasn't until really 2017 after I left my job that I really started to focus on that a little bit more.
That's great. And so as far as what were the next steps? So you're on the Trans-Siberian Railway, and you guys say, hey, we can institutionalize this and help other people get into the opportunity of real estate and passive income. What were the next steps, and how did you decide to proceed with the business plan that you have now?
Yeah, so that was a very preliminary discussion on on the railroad where the idea came about. And then, I came back to the States in April, and then my business partners came back to the States in May. And then we kind of got together and said, okay, we talked about this, and how do we make it happen? And we actually sat down, I think in July of 2018 in Sun Valley, actually, to kind of really talk about the business plan, the branding, the marketing, and the legal side of like getting all this started. We even had to kind of think about, their real estate is a really big asset class, right? So what part of real estate do we want to be in? There's multifamily, there's, retail, there's self-storage and things like that. So, so that was a discussion as well. So we had a pretty long, I spent a week with them, and we probably talked about the entire strategy planning session over the course of 2 to 3 days.
That's great. And so were these all partners from the same trip?
Yeah, so it was Charlie and Christina. So I've known Christina for a long time now. She used to work with me at our last job. She was working with mortgages, and then I met Charlie through her. So so all three of us went on the trip together, and now we're in business together.
That's amazing. I love that. And it's funny. I met Charles Chad at I think it was the Jake and Gino conference last year. Great guy. And so how did you guys know that, okay, we're going to be a good fit together, we're going to work well together? How did you know that you could kind of balance each other's skills and kind of each bring something different to the table?
That was definitely one of the biggest discussions, because, we know that if we're going to be partnered together, we have to share the same goals, same ethos. And that was part of the discussion from the very beginning, is that, what do we want out of this partnership? What do we want out of our lives? What are we looking to create? Everything from the mission statement to the vision of the company, to how we brand the company, all came through discussions with that in mind, is that how do we create this culture that will allow us to live free and, have the flexibility that we want. And that's still very core. Like even other things like, we should do this, this entire business with like more humor, with more ease, just some very subtle, abstract things that other companies may not think about. Like these are things that we talked about because it's such an important thing culturally to us to make sure that our mindsets aligned. So like I said, I worked with Christina for 4 years before this endeavor. So now we've been working together for almost 8 years now. And, we understand each other's skill sets. I know that, she's more conservative and way more detail oriented than I am. And, I'm good with numbers. I'm good with like relationships. And then Charlie is just a marketing genius, and he is a marketing major. He's started several companies before. And so he creates all of our content, all of our capital raising strategies, our marketing strategies. So, it is a complementary skill set. Now, we did also identify gaps in areas that we don't have, like, construction experience and things like that. And, we consistently identify gaps within our business and look to, either partners or resources or ways to learn to fill that gap.
And speaking of which, so walking through, I guess let's sidestep a little bit and go into kind of how you guys figured out your first investment and how you guys went about going about that.
Yeah, so our first investment, so we decided on Spokane as the market. And the reason for Spokane is, we want to focus on secondary markets. And Spokane fits the criteria that was set out for the market we want to be in. At the same time, it is also where Charlie grew up. So there are the kind of the team on the ground necessary to do due diligence, even though we are not there, right? So our first deal came through a wholesaler, actually. And interestingly, we actually just published a blog post on Bigger Pockets about our first deal because we have exited now. So nice. you can read the full, I don't know, I think Charlie probably wrote 5 or 10 pages, I feel like, about the deal and what we did during the time period and the returns. But it was an interesting deal because it was a 5-unit that came through a wholesaler, and it's as a seller financing component. So it was a very, very complicated deal because the seller has a mortgage on it, and they want us to pay the mortgage that's existing on it. But at the same time, they are very stuck on getting $1,200 a month. So we don't know where the number came from, but they were like, we want to get $1,200 a month. I don't care how it came about, what the interest is. I just want that money. And that's what we did. And we basically structured in a way that we paid the mortgage, and then we literally had an interest-free second loan on it for like a year.
Yeah.
And that financing aspect was so complicated that even the wholesaler was like, okay, if you guys didn't have that finance background, I don't think this deal couldn't get done because there was just so much going back and forth and structuring the deal. And yeah, so I think that really speaks to our experience having come from the finance background. And we knew immediately that we want to flip the single family that was on the parcel as well, because it doesn't make sense as a rental due to the rental income that you can get from it. So that was the other aspect too.
So how many units was that original one?
That was a 5-unit. It was a 4-plex plus a single family on 2 parcels, but they were selling it together.
Nice. And what kind of deals are you all looking for now?
Our core focus right now is looking for large syndicated deals. So, our goal this year is to do to lease sponsor a syndication deal that's in the 75 unit plus space, and we're focused in Greater Phoenix area. It is a very competitive market, so it's all a numbers game. Just got to keep pushing through essentially. But yeah, we've done 2 past deals of our other operators in Dallas and Orlando, so we wanted to take charge on this one.
I like it. And you said your background is with the numbers, with the pro formas, the underwriting. What is your process like within Akras? Like how do you look at the numbers and how do you do that?
Yeah, so I am in charge of acquisitions right now in Akras. So,
Okay.
my daily responsibilities comes from, all the way from broker communication to, underwriting, looking at deals, looking for deals and looking at deals, and then, running the underwriting analysis on it. And then it goes through the offer process as well. I'm also in communication with the insurance, the insurance agents, and then I have Christina reach out to property managers about that side. And then, so really our current underwriting is fairly conservative. We are definitely concerned about what COVID is going to bring.
Yeah.
I think there will be more hurt coming down the road. And so, we are not sitting on the sidelines waiting for a deal. We're actively looking, but at the same time, we know that there is that uncertainty coming down the road. And we want to make sure that we put enough cushions and reserves in place against that. So, for example, like our underwriting assumes 0 rent growth in year 1. We have very, very high, economic vacancy assumptions for year 1 as well. So even through, value add or stabilization, we're not, putting that all into the first year and a half numbers. So it's definitely making the finding a deal harder, but we just want to make sure that our investors are taken care of, and then we're not aggressively pursuing a deal just because we want to do a deal.
Yeah. That's the fine line, the fine balance is, wanting to close deals, wanting to move forward, wanting to take action, but yet also at the same time being cognizant of, hey, look, if we want to be in this for the long haul, if we want to, keep our reputation and our name, then we need to be able to do deals that we can actually believe in, conservatively underwriting and still understand that the deal is going to be a great deal for us and for our investors too.
Yeah, absolutely.
And so that's always the dilemma is, you want to do deals, but you have to make sure they're good deals.
Yeah, I think for our company, because my background, Christina's background is in fixed income, that we've been well trained about principal preservation. So really our number one focus is to make sure that our investors don't lose money.
Yeah.
So, and then, you make money, and that's, the icing on top. So we want to make sure that we under promise and over deliver. We have conservative assumptions, and we'll try very hard to meet or exceed them. But we see underwritings, that the assumptions didn't make sense. Yeah, you're making the numbers work, but it's only working on paper, and that makes us very uncomfortable with deals like that.
So what as far as what you mentioned, like you see kind of a little bit more hurt from COVID and the pandemic. What do you think that looks like in your eyes?
I think it's just the delinquency and collections issues that will continue. Obviously, I think there may be higher vacancy down the road as well. And then, it's just really hard to kind of imagine because, like a lot of people look at the stock market and say, okay, that has fully recovered, right? But then the economy hasn't, right? I think we recovered like only half the jobs lost since pre-COVID. Yeah. And that's going to take a lot more time. And some of those lost jobs are permanent. They're not coming back. So it's going to take a year or two for that to get to pre-COVID numbers. And then during all that time, the economy is going to be in recession. Sure, we have a really big recession. So, on that base, we're only going to be going up. But, it's still recession compared to pre-COVID levels regardless. So I think there will be more issues with collections and delinquencies and vacancy numbers in multifamily. And then, if some deals that were done very recently that have very aggressive assumptions, then that could be put under stress as well.
Yeah. I think that's going to be part of the interesting thing is how do those deals fare where operators or sponsors put very, very aggressive underwriting, either pre-COVID or even in the middle of COVID. And then now they're, kind of feeling the hurt, feeling the burn, especially in the next 6 to 12 months. Cause I agree with you. I think we're still in for a little bit more of a correction, because we're in a lot of ways, we're living on, kind of what's been pumped into the market by the federal government, by the low interest rate. We all have this artificially low ability to borrow money at such low interest rate. It allows for a lot more deals to happen. So I think I don't know if you saw, but like Disney, I think announced yesterday, like 28,000 people laid off. I mean, that's, I think is going to start becoming the norm of people announcing bigger layoffs like that.
Yeah, absolutely. I think, like I said, some of those jobs are permanent. You're not giving it back. So it'll be, I think we'll see a lot more, like you said, a lot more correction coming down the road for sure.
So with all the, the negatives and the kind of the downside of the pandemic and, it's affected a lot of people in a negative way, but what do you see as being one of the kind of the bright spot or the opportunity, rising out of the pandemic?
I think there are definitely, personally and professionally, right? Professionally, I think there are definitely many opportunities that exist, that's going to exist. We've seen opportunities in the hotel space. We're not in hotels, but we've seen other operators and sponsors that are in the hotel space. And there are other real estate kind of that's coming under distress that it is a very optimistic buy to invest in these instruments, because at the end of the day, right, this pandemic, this recession is short term. If you're an investor over the long term, this is the perfect time to take advantage of these situations. So I think, for a lot of investors, they're keeping their eyes and ears open. Like, we have conversation with investors and they're all looking for the next deal, right? Obviously, they want to make sure that their bases are covered, but at the same time, they understand that there are opportunities, that comes from a distortion like this. And so I think it is a really great time to invest, but just do it very carefully.
Yeah, I agree. I think first off, I think the niche that you and I find ourselves in multifamily is very much needed now more than ever, especially with less people being able to buy homes or less people wanting to buy homes, and less homes being built. So I think that all plays into it too. And but yeah, I agree with you. I think first and foremost, it comes down to conservative underwriting and really finding out, what uniques about your deal do you have and what separates it from the competition. But I think there's going to be a lot of opportunity in multifamily and specifically workforce affordable housing. I'm also biased because that's mostly all of what I do, but yeah, I tend to agree with you.
Yeah, I mean, we've been in conversation with one of our partners down in South Carolina, and they do all affordable housing, and they are seeing like a lot of opportunities coming out in that space as well. So it's definitely, I think it's just, as investor, as sponsors, just keeping our eyes open, because I think not only within multifamily space, if you know how to look at other asset classes, there could be opportunities there as well.
Yeah, I love it. So what advice would you have for some of our listeners that have wanted to invest passively in deals but haven't done it before, and are looking to work with a solid group like yourself?
Yeah, I think the one advice I have is definitely make sure that you vet the team that you're investing in. Like really understand their background, understand their underwriting and how they look at deals. Because I think that's the most important thing as a passive investor, because you're putting your money with a group that you need to be able to trust. And if you are going through like a capital raiser or someone, that's really hard because they don't really have control over these assets, right? So you want to make sure you invest with the owner operator. They're buying the assets and they're operating it, they're executing the business plan. And the other thing is that, I know a lot of people invest on faith, especially on their first deal, but definitely, understand, the operators, their experience, can they do this? Do they have the right team in place? How do they look at, do they have an economic outlook that's kind of aligned with yours, right? And then how do they do the underwriting? And I think that's all very important for a first-time investor.
Yeah, I completely agree. I think first and foremost, our job as operators is to make sure our investors know us, like us, and trust us. Mm-hmm. And that's exactly what it comes down to. When they make that decision, it comes down to, can they connect with you? Can they understand your philosophy of investing? Do they believe in that? Do they believe that you're going to get it done? Mm-hmm. And so that's all comes from nurturing a good relationship with your investors.
Yeah, absolutely. And it's everything from, being transparent, being communicative, how even how you market it. Are they professional? Do they have typos on their marketing presentation?
Yeah.
It shows attention to detail, right? It's not like, hey, I'm nitpicky about, you misspelling a word, but really, if you have attention to detail to this, you don't have attention to detail to marketing package. How do you have attention to detail in the finance where, the financial statement is many, many lines long, and, a single missed number could be, could change your projections.
Yeah. So what I have to ask, what is Akras? What is that? Akras Capital. What does that name stand for?
So if you ask Charlie, who's in charge of marketing, so Akras really is the Norwegian god of growth and hemp. So now we just say is the sign for abundance and growth. So but it came from the Norwegian god that symbolizes green and growth and nature and things like that.
That's awesome. I love that. And speaking of green and growth, as far as making your own monumental positive impact in the world with Akras, I'm sure that's got to be a big part of it as well.
Mm-hmm. Yeah, I think our key mission, right, is to both educate and create that kind of freedom. So we want to really bring this opportunity, and really, if they don't invest, just the possibility to them that they can learn about, how to generate more passive income streams, and, how real estate can help them. And I think that will really help people be more financially independent and less, dependent on their W-2 jobs, and kind of change that mindset that, that you have to work until you're 65, but rather you can create these passive income streams so that, if you somehow lose that job or don't want to do that job anymore, that your livelihood is not at stake.
Yeah, exactly right. And as far as like your all's experience with longer term investors versus like building that relationship through multiple deals, how has that been?
Yeah, I mean, it's been pretty good. I mean, we obviously have return investors in our deals, but our relationship with our investors, like we tell them, like we don't really expect you to invest with us the moment that you talk to us. Yeah. Right? It should be a slow process. You should be educated. You should understand the risk and return that you're getting yourself into, is this a good fit? It's not a good fit for everyone, right? It is a liquid, it is a longer holding period. There are many risks investing in real estate. So, do you have the risk appetite for it? And so we want to make sure that you understand. And, honestly, it's not only educating them, right? It's also protecting us from risks, because if they understand it, then they won't come back when, something goes on and say, hey, I never realized that this was going to happen. Give me my money back, right? So I think it serves both purposes. Is that it's both education and protection for us as well.
And what do you all, when you all talk about the vision of Akras Capital, like the long-term vision of Akras Capital, what does that look like for you all?
It's really, I think it's both the freedom is key. I think it's the freedom to choose. That's one. And the other one is, just making a difference. So we want to make sure that, in every community that we invest in, every asset that we invest in, that we're creating a positive impact, not only for our investors, but also for our tenants, for the neighborhood, and for, anyone that's involved. So I think that's key, because we don't want to be slumlords, for one. We want to always create value, want to always, make the neighborhood better, be a really, a cornerstone of that community. So I think, that serves both sides, essentially.
I love that. And as far as one piece of advice that you think would be monumentally important for our monumental listeners, what piece of advice would that be for you?
You mean anything? Like the world is your oyster? I think it's just to think about different ways to create passive cash flow. It may not have to be in real estate. It could be in other things, but just think about different ways that you can generate passive cash flow. I know there are a lot of people looking at, startups or VCs, and they do serve a purpose in your portfolios. But I think, for me, cash flow is the most important part. And the second part is to not lose money. So if you can combine those together, I think that makes for a very good investment.
Yeah, I love that. I love how you brought that up earlier. Principal preservation. Right. That's really important to investors. And I agree, especially with large asset management groups. That's a lot of times that's goal number 1A.
Mm-hmm. Yeah, absolutely. And if you think about some investments, that's very risky, right? You have to kind of make sure that you allocate your funds appropriately. I mean, sure, you could invest in Facebook all the way back then, but back then Facebook was very risky. But is that your goal? How does that fit into your portfolio, kind of your portfolio outlook? So just make sure that you understand what you're getting yourself into for any type of investment, really.
Yeah. And how you mentioned you all are looking in Phoenix right now?
Yes.
How did you all pick Phoenix?
So we picked Phoenix based on a number of criteria. So we probably have like 13 different criteria for when we want to go into a market. So that's anything from population growth, job growth, rent growth, vacancies, whether or not it's tenant or landlord friendly, what are the economic anchors in that neighborhood, et cetera, et cetera. So really the Greater Phoenix, like Mesa area really rise to the top when we look at our criteria. And that it is a good market because it is a very competitive market and a lot of people are in it. So, but that's what you have to deal with, right? A good market will have competition. There's nothing you can do about that. Yeah.
And how are you all separating yourself from everybody else with all the competition?
Well, we are in communication with a lot of groups in Phoenix, and not only on the brokers, but also having communications with local investors and local potential partners so that we can kind of create our, really like put our brand and reputation out there. As a thing. And then the other thing is just to continuously submit offers. I mean, the last offer submitted, it was 25% below the investor price. But, just continue.
I know the feeling.
Just continue to put yourself out there. Eventually you can get name recognition and they understand that you're there and you're serious investor.
Yeah. I think that's right. I think putting your name out there, being consistent, persistent about it, knowing who the really connected people are in town, and just being genuine and honest, and also giving feedback to brokers, I think is helpful. Yeah. Even if you don't make an offer, or if you make a lowball offer, or you make a way lower offer than they expect, you give them a reason, and usually that'll suffice. And then that'll keep developing the relationship, because over time they're going to learn more and more about what exactly deal fits for you. And then they're going to be able to find deals for you, potentially off market or pre-market. And then you won't have to maybe compete with 20 groups for one deal.
I feel like there will always be competition no matter what. But yeah, you're right. You're absolutely right. That you'll get you'll get onto that exclusive list, and then maybe you only compete with 6 other groups.
Yeah, instead of 50.
Yeah, exactly.
Yeah, it's crazy. A friend of mine's a multifamily broker, and he's like, yeah, our email list is like 50,000 people. I'm like, oh my gosh. So every time I see it, I know 49,999 other people have seen it.
Right. Yeah, absolutely.
Well, I've loved our episode today. I've loved hearing your story, Akras' story, how you guys have really, gone from that Trans-Siberian train, which is amazing backstory, to where you guys are today, and really the sky's the limit now. So I love that. So thank you so much for sharing your story. And with that, let's jump into our monumental questions.
Sure.
What does success mean to you?
Success means 1, freedom, and 2, I think also contribution, just giving. Because I think success is about, how much can you give as well? Not how much you make for yourself, but how can you make that difference and that impact on others? Success
is freedom and contribution. Mm-hmm. What about daily habits or morning rituals you have?
So I've been doing Miracle Morning pretty religiously. So I do meditate in the morning, and I do read. The only thing that I don't really do is journaling, because I'm not a huge journal person. But I do definitely get my meditation, reading, and exercise in before I start my day. So I exercise every day. So yeah.
Yeah, when I got regular with exercising in the morning, that was a game changer for me. I was like, man, I get my blood flowing every morning. That just changes the whole day.
Yeah, absolutely. And you're in way better shape too,
Yeah. I love it. What about favorite book or book you are currently reading?
So a book I'm currently reading is Fierce Conversations by Susan Scott. So I'm part of a group called Go Abundance Women. And this is a book that came out. She spoke at our last retreat. And so I just been reading the book on having fierce conversations.
I love it. Well, with that, how can our monumental listeners reach out to you, connect with you, or get in touch?
Yeah, so you can find us on our website at www.aggregatescapital.com. And we do have a monthly newsletter. We also recently published a white paper called The New Roadmap to Financial Freedom that you can download on our website as well. And obviously, feel free to reach out to me in email, lzou@aggregatescapital.com.
I love it. Guys, take Linying up on that, lzou@aggregatescapital.com. Guys, take her up on that. And if you enjoyed today's episode, make sure that you share it on social media. Let other people know you're listening. Let us know you're listening. Share it and tag us. Tell us what part of today's episode you really enjoyed. And guys, with that, have a monumental day.